Hello and welcome to the day ahead. It is Monday, June 6th. I'm Andrew Gagan. Let's take a look at how global markets finished the week. Wall Street taking a hit, so well in the red, as a Goldilocks jobs report further fueled an aggressive path of tightening at the US Federal Reserve. Tech, consumer goods and consumer services leading those declines. Stocks specifically, Tesla shares plummeted on the back of news Elon Musk planned to cut staff by 10%. In a leaked email, the billionaire said he had a super bad feeling about the economy. He has since backtracked, tweeting that the total headcount will increase over the next 12 months, but the number of salaried staff will change. Now, Crowdstrike are falling more than 7% despite raising full-year guidance and a first quarter beat on both the top and bottom lines. Airlines are also under pressure after American Airlines forecast capacity towards the lower end of guidance, citing a lack of staff. And Delta and United, they were down around 3%. All right, on the data docket in the US, stronger than expected jobs growth has reinforced the view that the Fed will need to remain aggressive to dampen demand. The Nonfarm payrolls report revealing US employers hired 390,000 workers in May, well above the 325,000 jobs forecast, while the unemployment rate held steady at 3.6% for a third straight month. Hourly earnings there rising by 0.3% to be up 5.2% on a year ago. And a stronger than expected labour market pushed US Treasury yields higher, the 10-year note to 2.94%, the 2-year yield to 2.66%. And the data also strengthened the US dollar, and as a result, the Aussie dollar easing to 72 US cents, having come back somewhat since then. All right, taking a look at the week overseas, what's to be expected. Kicking things off today, China's Caixin PMIs. Balance of trade from the US is out tonight, in fact on Tuesday, and China will have its say on the matter on Thursday. Jobless claims are released stateside on Thursday as well. And Friday, a heavy hitter. China will drop its year-on-year inflation and PPI data. And the US will go tit for tat with its year-on-year inflation read. Well, having finished last week strongly, the local share market is set to erase some of those gains. The ASX futures currently down just over 0.4%. And global oil prices rose on Friday despite OPEC Plus lifting production, with markets betting it won't be enough to boost global supplies, particularly as China reopens. Brent crude up 1.8% to $119 a barrel. The iron ore futures price rose by 1.5% to $144 a tonne, seeing it rise more than 8% for the week as China's steel mills came back online with the easing of COVID restrictions. And aluminium fell some 5% over the course of last week. And a higher US dollar and bond yields pushed the gold price lower to end the week relatively flat. And Bitcoin, it continues to flirt with the 30,000 US dollar handle there, with price movements in the broader crypto market relatively muted. Well, it's a big week on the local macro front, with the Reserve Bank set to hike rates tomorrow. The CBA is tipping at least another 25 basis points to be added, bringing the cash rate to 0.6%. ANZ has upgraded its call after last week's GDP print, now seeing a 40 basis point hike from the central bank to take the cash rate to 0.75%. And we'll also be watching May's inflation gauge from the Melbourne Institute, ANZ's job ads, AI Group Services PMI, and new home sales data from the housing industry on Friday. And that is your day ahead. We'll see you again tomorrow.